So welcome to Adelaide. I didn't have very far to travel today. First time I've been to an actuaries conference where I've been able to do that, so thank you for bringing it to Adelaide. I'm sure you'll find Adelaide a very welcoming place. I've had a lot of experience with working with actuaries over the years, and I think some of you have probably heard me say this before, but so for those people I'll apologise. But the one thing that I have learnt with actuaries is, whilst they're very useful, the one thing I have learnt is that the only thing certain about an actuary is that they're uncertain. But I think that that does help us with understanding what we need to do to manage the schemes that we're in. So I'm assuming I just press buttons up here, do I? There we go. I thought I just might give you a little bit of context in terms of where we came. I did start at what was WorkCover, now ReturnToWorkSA, here at the end of almost this time 3 years ago. I started on the 3rd of December 2012, so 3 years coming up. When I started, the scheme had been running for, I think, about 27 years. During that time, it managed to get itself into a position where it was nearly $1.4 billion underfunded. It had a funding ratio of 63.7%, not very healthy. I think the most important thing, though, was that in terms of contributing to the unprofitability of the scheme was that it was a scheme that was charging an average premium rate of 2.75%. So an average across the scheme of 2.75%, which was about more than double what most other jurisdictions around Australia were charging at the time. Interestingly, though, our break-even premium was 3.34%. So before we even started the year, we were about $140 million behind the eight ball. We were collecting $660 million each year in premium, but we needed $800 million. So over the course of the next 2 years, we actually were able to turn the scheme, in part due to legislative reform. There's no doubt that the legislative reform has provided the scheme with a single point in time correction. But more importantly, during that 2 years, through a much more, I guess, active and hands-on approach to the way in which we managed the scheme, we also managed to get a little bit over $500 million in liability releases from the scheme due to improved claims management. And a good part of that was actually due to much significantly improved return to work rates, to the point where we're actually able to improve return to work rates in the scheme by around 30%. In part due to the active management that we introduced in the scheme. I remember a little before, when I got the role over here, I was talking to a chap from Victoria who's now in South Australia called Lem Boehm, who reminded me about, if you're going to manage these schemes, don't outsource your brain. It took me a little while to work out what that actually meant, but I think what it really meant was don't abrogate responsibility to others. If you're in charge of a scheme, step up, take responsibility for it, engage with those people around you that are actively participating in the scheme, but most importantly, step up and take responsibility. And that's what we did at what was WorkCover, now ReturnToWorkSA. So, I guess the most important thing in terms of managing the scheme was that taking responsibility, to acknowledge that the scheme was actually the worst performing scheme in Australia. In fact, from what we could see, it was probably one of the worst performing schemes that we could see anywhere in the world. It was very expensive. There aren't too many schemes around the world that actually paid people 80% of their award wage until retirement age. It was very expensive. It was a scheme that was actually designed back in, I think it was 1987, I might have got that date wrong, but it was actually designed as a 3% average premium scheme. We were charging 2.75, needing 3.34% to run it. It was very expensive, but most importantly, it was designed to be a scheme that was roughly around 3%. And it actually did provide me with somewhat of a challenge, because when I first started in the role, we also had a new minister take on responsibility for the role in John Rao. And I remember one of the first conversations that I had with the minister was he said to me, what we'd like to do, and at the time they were actually going through a review of the scheme and looking at sort of rejigging the scheme, tinkering with it a little bit. And he said, look, one of the objectives I want in this review that we're doing of the scheme is to be able to deliver a premium rate, an average premium rate that's less than 2% of premium, or an average rate of 2%. What would you think about that if we wrote that into the preamble in the legislation? And I said, Minister, I'd be delighted, provided that you're prepared to, and he wanted 2% because that's roughly around getting close to what the other jurisdictions were charging. And I said, Minister, I'd be delighted if you did that, but you'll also need to reflect a scheme structure that's similar to those jurisdictions that are sub 2% as well. And at the time, that was the catalyst for the exchange that we had that ultimately led to thinking about whether we could actually renovate the house or actually knock it down and rebuild it. But I think one of the most important things that came through when looking at the scheme was just generally the health outcomes. It was a scheme that actually made people sick, and I'll talk a little bit more about that a little bit later. But for all of the reasons that Norman was talking about earlier. This scheme, as it was constructed, actually made people sick. And that proved to be one of the challenges in the redesign features when the government were looking at what they might, rebuild the house, as I describe it. So the scheme was very much about having had those initial discussions and helping with understanding why it was going to be very difficult to actually just simply modify the scheme that we had to get, one, a more affordable scheme, but most importantly, and what the real objective was to get a scheme that actually delivered better health and return to work outcomes. So that became the clear objective. Was an affordable scheme, but most importantly, one that actually focused on better health and better return to work outcomes. So that became the objective. It's also, if you look at the preamble in the new legislation, it's the core principles under which the scheme is based and which we've been charged as Return to Work SA with the direction that we're taking in managing the scheme. So we're moving very much away from what I would describe as a liability and disability scheme, that one that focuses much more on that old cliched term, and I've been to many of these actuarial conferences where people get up here and talk about early intervention, but I think what we've done with Return to Work SA is we've really focused in on what does it mean to provide early intervention within a scheme and to focus on what I would call diagnosis and treatment. What's the issue that's driving this issue that's keeping people away from work, and what is it that we need to do to help them recover from their injury and to move on with their lives, either returning to their pre-injury duties or moving very quickly to identify where we need to move them into some alternative form of work. So that became the very key focus to our scheme. We also needed to focus on, I guess, our product, and our product being one that really wanted to meet those better health and return to work outcomes. We also recognised that as a regulator, we were more than a regulator. We were actually one of Australia's largest insurance companies as well. Not as large as Victoria, New South Wales and Queensland, but nonetheless an insurance company that was collecting $650 million in premiums, pretty decent sized insurance company. But we didn't actually behave like one. We behaved like a regulator. We didn't actually acknowledge that there were many people out there that required service from us. We hid behind our shield. Our shield was our protection, and we used that shield. That shield was called the Workers' Compensation Act, and it gave us authority to do whatever it was said in that. And we didn't take the time to really interact with our customers, our stakeholders, around understanding what it was they needed from us. So one of our key principles in moving the scheme forward was to introduce a concept of service. Service was to become one of our key mantras. If you come into Return to Work SA now, you'll see we have a slogan that we use in everything that we do. It's simply called, "How can I help you?" So when you're engaging whether it's internally with people that you're dealing with internally within Return to Work SA, or whether it's employers or injured workers or service providers, we now have as our mantra, how can I help you? Not how can we make life easier for me, I'm here to serve you. And that was a real challenge, I guess the beginning of a cultural shift from us right from the start. And I can remember the very first day when I started at what was WorkCover and stood up in front of staff in a big room like this and talked about how I wanted to see our focus going forward. And I think we've done a good job of moving in that direction. Have we got a ways to go? Absolutely. But one of the key attributes that comes from a how can I help you culture is if you do it long enough, people start to trust you. And that was what was a key ingredient missing from our scheme is nobody trusted us. And again, do we have everybody's trust today? Again, absolutely not. But are we moving in that direction? Certainly. And I think if you speak to many of the organisations that interact with us today, there is a feeling now that people are starting to trust in what we do, not in what we say. So what were the key critical success factors? I guess one of the first ones was we did have a fairly brave minister. I mean, it was a very brave thing to do. About 6 months after we got started on trying to think about where we needed to go, our minister got up in front of a conference which was called Both Sides of the Fence here in Adelaide, which is plaintiff and defendant lawyers, and basically said, it's buggered. So acknowledging, for the government to get up and actually acknowledge that the scheme was buggered and needed to be reformed was a really big, turning point for enabling consideration to what the new scheme actually should look like. I think the other key, and I might just say, whilst the new reforms have brought about approximately $900 million turnaround in the scheme, so we got about 900 out of the scheme reforms and about 500 out of liability releases through a better management. But the one thing that we acknowledged when the reforms were done is that 900 million release is a single point in time. So the legislation is a single point in time correction. If you don't actually manage or change the way you manage the scheme or manage claims and premium, then you will just continue to get more of the same. Yes, you've changed the benefit structure, but you'll end up back where you were in a couple of years' time. So our key focus wasn't just on the legislative reform. That's almost the easy part. The hard part is changing the way in which we actually manage the scheme. And that focus wasn't just on claims. That was our primary focus to start with. But as we started to get a better understanding of what we needed to do in that space, we've slowly turned our mind to introducing a more active approach to the way we underwrite the business as well. You might say, well, as a statutory public underwriter, how do you underwrite? Well, believe me, even in a monopoly business, you can underwrite. And I won't spend a lot of time on that today, but if you want to talk to us about that at some later point in time, we can talk to you about that. So we don't just use a formulaic approach to the way in which we price, we use individual risk approach as well, particularly to medium and large employers. Right people with the right experience to lead the change. Can I just ask a bit of a question or show of hands perhaps? How many people in the room have actually had what I would call extensive experience of actually picking up a claim, particularly a workers' compensation or a CTP claim, and actually meeting face-to-face with an injured worker and employer? Are there many people in the room that have actually had experience doing that? Not very many. What we really focused hard on at what was WorkCover and now Return to Work SA was pulling together a team of both executives and management and people in the appropriate areas that actually had real life experience in managing claims, in underwriting workers' compensation. As an organisation, we really only had a handful of people that had claims experience within that organisation. I'm eyeballing one right down there now, and Brian, who was one of the few people in our organisation that actually had extensive claims experience. But it's been a very important, a key to the success that we've had going forward. I mean, my background's insurance. I've actually sat in workplaces and sat down with injured workers and employers. My general manager for insurance, Rob Cordner, has done the same. Michael Francis, general manager for regulation, has done the same. He's worked in self-insurance. Darren Wright, our manager for agent performance, has managed claims. We've got a team of people in our organisation now that are well experienced in doing that. I spoke a little bit earlier about our how can I help you approach. I'm getting the 5-minute wind up, so apologies for that. But look, what I really would like to emphasise is that our key objective with I guess the way in which we're behaving now is working to those two core principles in the legislation. One is what the government expects from us and what the community expects from us is an affordable scheme. But most importantly, what they're really wanting is a scheme that drives better health and return to work outcomes. And we've done that, we believe, over the last 2 years, primarily through our much more active approach. And I must say that one of the key attributes to having an active approach to managing the claims particularly is having, we've been very fortunate to have 2 agents in our scheme, in Employers Mutual and Gallagher Bassett, who've provided us with the ability, or the agility I should say, to move quickly with us as we've identified the areas where we need to focus our attention. And what they've learnt from us is you can never relax, that we're constantly identifying where we need to turn our attention to, and having these 2 scheme agents that bring to us this agility to be able to change and move our focus almost on a dime has been absolutely critical to our success. As I pointed out earlier, the legislation is only a single point in time correction. For us to be a scheme that is I guess competitive with our other jurisdictions, we still need to get about another 30% improvement out of this scheme. We believe we can do that if we continue to focus on the early intervention strategies that we've been putting in place, and in particular in the way in which we're now driving risk management within our business. We have a really key focus on risk management and premium underwriting. I think it's about, though, understanding the importance that data plays in managing these business. The very first thing that we did when we came into WorkCover at the time was to get a handle on what the data was telling us. And the data was the key to helping us understand what was driving performance in our business. It didn't tell us what the problem was, it told us where it was, though. And then we were able to go and have a look and develop key strategies to enable us to focus on those better health and return to work outcomes. But I think what is, I think to me, one of the most pleasing outcomes of where we are at the moment is 2 things really. One is that we have actually improved return to work outcomes in the scheme by around 30%. And what's helped us do that is this concept that we've introduced within our scheme of what we're calling mobile case management. Each agent rolls it out a little bit differently, but what we're doing is we're getting our case managers out from behind the computer screens and getting them out into workplaces where they're sitting down within about 2 to 3 days of a claim being reported, where that claim looks like they're going to be off work for probably a fortnight or so, and engaging. We have a scheme which is predominantly small to medium business. And for all the reasons that were outlined in the opening address by Norman, workplaces often have the solutions to helping people get on with their lives, to understand what it is that's creating the problem that they have in their life, and how you can get over that and how you can move beyond and have a healthy and productive life. And I'm sure over the course of the next day or 2, you'll hear from some people that will probably talk a bit more about what's happening in that mobile case management space. Let me tell you, it's a game changer. We're committed to it. Yes, it does cost a bit more, but it's important for the engagement that we need to be able to drive those better health and return to work outcomes. So I think with that, a little rushed, I'm sorry. Lots more to talk about. Hopefully more will come out over the next couple of days. So thank you very much.
Thanks, Rick.
Thank you. Thanks, man.